Nothing that we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. It is Cowboy, aka Nick, and we are having quite the morning in markets. Yeah. So everything started freaking out all at once. It was a lot of fun, and things were behaving in a way that were hard to understand. And it took me about a few good minutes to go through everything so I could figure out what the hell had happened. And it turns out we got a little bit of news here that's pushing markets as a whole. And of course, you all can take a wild guess as to whose social media post, I would say tweets, but he doesn't tweet anymore. He goes on Truth Social, his own platform, the infamous The Donald. Yep. So here you go. Why are markets freaking out? It's because of this. See if I can put this on the screen in a way that doesn't cut stuff off. Ooh, okay, that's a little better. Futures plunge after Trump threatens 25% tariff on Apple, 50% on Europe, right? So he's got a couple of posts here, social media posts. I'll see if I can zoom in on this one. This is Apple here. I've long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the U.S. will be manufactured and built in the U.S., not India or any place else. If this is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter. Okay. Very forceful. And then, and of course, we have the Apple chart. We'll look at that in a minute. But I think this might be the bigger news here. This was released 7:43 a.m. I'm assuming, I don't know, Central Time. I'm not on Truth Social, so I know I'm terrible. I should be. I'm a conservative. So I should be on Truth Social. Yeah, not quite. The European Union was formed for the primary purpose of taking advantage of the U.S. on trade. It's been very difficult to deal with. There are trade barriers, VAT taxes, corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit of more than $250 million a year. It's $250 million. Our discussions with them are going nowhere. Therefore, I'm recommending a straight 50% tariff on the EU starting June 1st. There is no tariff if the product is built or manufactured in the U.S. Okay. I kind of think that the $250 billion or $1 million a year number is a bit low, because the effect of what is going on with all of the financial chicanery that goes on between the Europe and the U.S. and the banking system and the Eurodollar and all these things that we've kind of glossed over and talked about this. Not, if V the Gorilla were on, I might have him talk a little more about the Eurodollar, things like that. But in the spirit of Tom Luongo, there is a financial war, and a lot of the battle, a lot of people don't know this, but a lot of the fighting is actually between the U.S. and Europe, as opposed to where everybody thinks it is, which is the U.S. and China. Okay, China. It's like Trump when he says China. The reality is that China and the U.S. have made a lot of money together over the past 20, 30 years. Will probably continue to do so. The U.S. is about a third of China's purchasing power, and China is negotiating with the U.S., and things will probably be just fine with China. Everybody thinks we're going to go to war with China because they look at the wrong news. And while I'm not saying that is impossible, I am saying that the financial issue right now is actually with Europe. So we got to talk a little bit about why that is, right? We're going to go into it a little bit. I think we might get V the Gorilla to come on. Let me see if I can get him. I know he wanted to come on. He thought we were going on. We don't usually do Fridays. Let me see here. Algo Factory. Okay, let's see if we can get him on. I know when V comes on, we'll probably talk a little bit on here, and then we might actually go to an unscheduled private live lab, because I know V might have some information. He's really good at finding out kind of what's really going on because of the deals he does and the people he deals with. He might be able to give us some inside type information, not insider information, nothing illegal. He just happens to like know what the hell's going on because he does massive deals in Bitcoin and gold around the world. So that said, let's go ahead and take a brief look at the charts, and we'll go into what's going on really with Europe. First of all, amazing prediction. USD JPY was showing bearishness at the beginning of the week, and as you can see, my main path that I drew was like what happened basically. This last push down happened today, hitting the target. Almost hit the target. We're so close to the target. Look at this. I mean, we're right there. Here is the price. The target is the blue line right there, and price made its way to right there this morning, and largely, due to mostly. Let me see here. How new is this candle? I have to go to a lower time frame. It might be that this price move down happened prior to the announcement, or the tweets, if you will, the social media posts. I want to say tweets because they're not really tweets. Let's see. Yeah, I think it happened concurrent with that. But long story short, the Japanese yen has been getting stronger, and the algos all said that it was going to do so. And so basically, I had called this move down, and it more or less followed that type of pattern. I mean, I just, I draw these like a general idea. Remember, these are not like for trading. They're just to know which way the wind is blowing. So the reality is, though, is that I was expecting a hard press down with very strong kind of little bear market rallies up. And that's literally what happened. So just this hard press down of the on the dollar by the Japanese yen, right? Because this is USD JPY. So JPY gets stronger, this chart goes down, right? And you get these hard pop-ups to grab liquidity on the way down. But then you get these waterfalls down. So hard pop-up, move down. Real hard pop-up, what seemed to be the beginning of like an actual retracement back upwards of the dollar against the yen. And then we had it just grind right back down. So there's a lot of talk right now of whether or not the carry trade is going to be taken back off. And the carry trade is something also that that Via the Gorilla really, really lined out for us like over a year ago, well before the whole August thing with the carry trade. And I'm not going to spend a lot of time on it because I think the news coming out about the Bank of Japan unwinding the carry trade, I think that's BS. I don't think that's going to happen unless it's like, going to help us somehow. Like the Japan has been very, very cooperative in the tariff conversation. They were, they came to the table before the tariffs even happened. Like according to Tom Luongo's like market update yesterday, he was saying that on the day of the inauguration, the Japanese leadership were talking to the Trump White House saying, hey, let's make sure that we work together here. And the other end of it is that, and this is going to sound strange to people who don't understand the way the whole system works, but the Bank of Japan has been the liquidity solution for the US and many other stock markets around the world, especially the US and European stock markets. So what happens with this is that the carry trade it sounds like a complex thing, but let's talk about what it is and why it matters and why the news about it, I don't think matters right now, which means we're not going to spend a lot of time on it. But the Bank of Japan issues very cheap bonds. And those bonds, they can sell to people around the world, like to the US and Europe and anybody else who wants to buy them, and they'll trade out for bonds that are a bit stronger, like US debt, European debt, whatever that might be. And then that Japanese debt is used as a liquidity source for, like, say, stock markets, mostly equities markets, or, well, let's just say largely equities markets. It might be used for other things, but the only place I can really see the movement in a very definable way is in the equities markets. So basically, and usually when the stock market dumps, the Japanese yen gets very strong. And I've been talking about this. I've made videos about this recently. Is the Japanese yen predicting the stock market? Well, look at the NASDAQ right now. Holy moly. Now, my initial algos were calling for a move down in the NASDAQ at the beginning of the week, but you'll see I did not print that, right? I didn't predict that because these were being held up. And the algos were like, the algos were at a make or break for the stock market, especially the NASDAQ, which seems to be where all the focus is because that's where all the tech stocks are. Now, had I just gone with what the algos said, I would have wanted a move down. I did not expect this move down, but this is a news move down. This is why I painted in my Sunday prediction this dotted line. I expected a possible rejection at the top and a move down. And it would have ended right in this, maybe a little lower than what I thought. Not quite here, but if I were to correct that prediction, it would have been probably like here, except for the news this morning really crushed it down. So this alternate route was an attempt to say, hey, look, if the stock market is allowed to fall, if the stock market no longer gets money pumped into it to crush it upwards, then this is where it'll probably go. I was not too far off. However, the news this morning has caused a major move down. And what was interesting is that the move down actually occurred in a way that was almost agnostic to the dollar in a way. So I was looking at the AUD and I was just going to scalp a little bit of a long on it, right? And then as soon as that news came out, my little, and it was a scalp. It wasn't very much money. It was just, it was just me like, hey, making money on a Friday, which Fridays are terrible for trading anyway. And it was supposed to go up, but this got knocked down hard. AUD USD got nuked like this, right? So I'm like, okay, well, then I look at USD JPY, and in that same time frame, it got nuked. So this is what's interesting about it. It's like the dollar really wasn't. I mean, the bonds, did. If you look at the Zero Hedge article, this is bonds bid, and the dollar got strong. And usually, when people want to put money into the stock market in the future, meaning the stock market's dumping, then people go to the dollar for liquidity. But largely, money goes to the Japanese yen in that instance, because the Japanese yen is a safe haven when stocks go down, because the Japanese yen is a primary liquidity source, or not primary, maybe secondary liquidity source for the equities markets, right? For stock market. So stock markets are good. Money leaves Japanese yen, goes to stock markets, right? Stock markets are bad. Money leaves stock market, goes to Japanese yen. Well, this is why the USD JPY goes down in those circumstances. And by the way, I know everybody wants to see Bitcoin, and we'll get to it. Bitcoin's just reacting. So it's, Bitcoin falling, Bitcoin go down. That's all you really need to know. Market push Bitcoin down. That's the whole story, but we'll look at the charts anyway. Don't worry. So look, if the Japanese yen gets strong, then in comparison, even if the dollar doesn't move, in comparison, the dollar gets weak. Okay, so that's why the USD JPY chart goes down in these kind of scenarios, right? That's why. Understand that. Just understand that. So the question kind of is, why is it that the JPY kept getting strong and this chart kept falling, and yet the stock market was delayed in following along? Because I was like, hey, man, I know it's supposed to do this. Why is this not falling? Like all week long, and I even made room for that to happen, but I continued to kind of go along also with the fact that money just gets crammed into the stock market as well. Because if the stock market were allowed to react naturally, it would not look like this on the weekly time frames. We all know that the stock market is basically where everybody's retirement is, and therefore needs to be held up because markets. Right? So the Japanese yen did, in fact, as I said in my videos, predict the stock market. The stock market just took time to catch up, and it started to catch up days ago. It wasn't just because of this announcement. This announcement put that move into overdrive, though. So, you have the Japanese yen going down all week long, and if you go back to the NASDAQ started to go down partway through the week, right? It got held up and then really took a hit on Wednesday. But it still stayed in that range that was between roughly, say, 21,000 and 21.5. But it's finally started to break right here. And so Trump went ahead and announced his tariffs at a time of weakness, which I don't think is any coincidence at all. A lot of what's going on with markets right now, I think, is market capture. Look, every single president, every single administration, they all will use the markets. It is what it is. Trump is Trump. Like, I don't think he's any better or worse. Well, I think he's better, but I don't think he's certainly not any worse than prior administrations before him as far as doing things with the market. It is what it is. If you don't like it, then go be a farmer. Or not shoot, don't be a farmer. Farmers are awesome. I love farmers, but go do something that like the market doesn't really affect you. You know what I mean? Go, I don't even know what to say to you on that. Just just don't pay attention to markets if you don't like the fact that the people in charge will control and use the markets, because that's just life. Ain't nothing changing on that. Gold, obviously reacting. I expected gold to head down, started to do so. And then the market started to show signs that something was going to happen. Gold went ahead and crashed back up. So the market instability was also being forecasted by gold, right? So again, I expected the markets to be held up, but for whatever reason, they did not do so. And I can guarantee, at least, I can guarantee that my opinion is strong, that the market had been, after the moves down with the initial tariffs, the market was pushed back up, but it was pushed into a delicate area. And I did talk about this delicate area on Sunday. So let me move over to a chart with less noise on it. So this area, and look, I can't say too much. My Algo Factory members know exactly what I'm talking about here when they look at the chart. And in particular, when they look below at a particular bit of information here, right? That's on the weekly. And then if you look at the daily, given that the weekly was in a delicate spot, the daily was in an even more delicate spot, but it was all the way back here, right? So, it wasn't where it is now when I first said this, but it was clearly a delicate spot. So the market was ripe for a retracement, right? So before we talk about what might happen with the NASDAQ, let's take a look at what might happen with Bitcoin. So Bitcoin definitely taking a hit here. So remove some drawings. We're going to keep this, let me see, it's on the daily. I'm going to go to the weekly. So the question really in what's going on is, first of all, Bitcoin's holding up rather well, considering, it's below the, okay, first of all, Bitcoin had a hell of a 1, 2, 3, 4, 5, 6 or 8 weeks, broke the all-time high. Topped out, I think, at about 112,000, right? Prior all-time high was 109. This was back in late January, right? So Bitcoin broke the high, and their metrics are still pretty much redlining across the board, redlining like a car redlines, but nothing goes up forever. There's always pullbacks. So we have to kind of predict what might happen with Bitcoin, whether or not it can withstand the move. Now, I've told is withstand the market moves, like the NASDAQ move and all that. Can Bitcoin hold despite all of this madness? Well, I mean, the last time we had major market, turmoil, Bitcoin went down with it in the middle of Bitcoin's bull market. And ultimately and historically, major market turmoil has caused Bitcoin to fall. Now, the NASDAQ itself in this time, let's overlay the NASDAQ on this so we can just kind of look at everything at the same time. Okay, new price scale will be fine. So Bitcoin more or less followed the NASDAQ, like going back to, December. So when the NASDAQ started to fall, Bitcoin actually led that. Bitcoin fell first prior to the NASDAQ. But in this case, it bottomed out when the NASDAQ bottomed. It topped out around the time NASDAQ topped out. So this shouldn't really be a big surprise that Bitcoin is falling, but you'll notice it's not really falling that hard. Now, these are not on the same percent scale, and, but the main trend should be very apparent to you. Now, in the short term, Bitcoin is going to be affected by and follow the NASDAQ. Okay. So just understand that. Let me see. Sorry, give me 1 second. Okay, so if you look at the charts, Bitcoin's a bit more bullish than everything else because it is kind of in its bull market. And the main question is, will it continue to be bullish? Well, this is the, excuse me, I got to mute myself. Hold on a second. It's like 2 seconds here. I'm going to stop clearing my throat with the mic. That's kind of gross. All right. So I'm going to go to the weekly. We're going to just kind of look at the general trend, right? This is very, very textbook when it comes to the way the markets move. Okay. Going back to last year, right? Bitcoin's bull market, price is moving up, price is in an uptrend. Okay. So you have a high, low, higher low, higher high, higher low, and now technically a higher high, right? This high that it made is only a few thousand above the prior high, but we don't know that it's not going to just go higher. The market turmoil could make a difference, though. It might be that either Bitcoin, comes back down a bit if the markets really, really fall hard. If the Nasdaq and everything, it might pull it back down. And the area to be concerned about as to whether or not Bitcoin remains in an uptrend, which is bull market, is this level right here at about 74,000. Because when Bitcoin came up, it just grabbed liquidity where liquidity was, because there's a massive block of liquidity that was created here from the March of 2024 high down to the August of 2024 low. And that madness was in a big way this push down here, this I think it was like a 30% correction or better. That was created by the Japanese defending the yen, right? That was the first actual possible look at unwinding the carry trade that we talked about earlier, where the Japanese bonds are used to be a liquidity source for the stock market. That whole conversation. So when that happened, this happened, right? And then the carry trade was put back on after a short time, and markets kept going up. Regular, what do you call it? The stock market, and then Bitcoin resumed its move up as of pretty much as of election day. Bitcoin really started to take off here right when Trump got elected, and it's still in an uptrend. Sure, it might need to take a break, but what may happen with Bitcoin and how it behaves right now is going to tell us a lot, because Bitcoin's under a lot of stress. Bitcoin is just below that prior all-time high. So we pay attention to the new high at like basically 112 and the prior high at 109.5. If Bitcoin, even despite all of this madness, if Bitcoin can either, just break above and continue up, or if Bitcoin can go sideways like this and then break up, or even if it just pulls back but doesn't break below this area, this would be like a really brutal market conditions, meaning like the Nasdaq's really dumping and things go sideways, which I doubt, because Europe's not as important as China. Sorry. I doubt Bitcoin's going to go back down here, but as long as it stays above this level, then we're still technically not in a downtrend, right? And even if it breaks below that, it could just be a complex pullback and continue up, right? But if you see, any of these scenarios, we're not in a bear yet. The bull's not over yet necessarily, any of the scenarios you see on the screen. But if Bitcoin were to break down, go below this level, come up here, and then break down further, okay. Yeah, now now you violated the uptrend, right? Now you have a lower low and a lower high. Now it's probably over, right? So, that could take, that might not take as long as I've put on the screen. It could be as quick as, like in a couple months. So, V the Gorilla did tell us that there was going to be a monkey hammer. He did tell the private live lab. He didn't say it to the, everybody here watching, because we don't give out all of our information and everything like that. But he did tell us about, a week and a half ago, V the Gorilla told us privately that there was going to be a monkey hammer, meaning that the markets were going to be knocked down. And surely enough, it's what we're seeing. Now, is it going to be tempered? Is that going to chill out? Is it going to be, are they going to walk it back? Trump is known for, hey, we're going to do tariffs. And then like 4 days later, we're not going to do tariffs. And then like the market just goes wild. So, One thing about Apple and the threat to Apple and why that's important and why that would be very detrimental to the NASDAQ, which let's go in and see how it's doing, by the way. It's still bearish. It will probably continue down for a time. I don't expect the NASDAQ to recover today or next week unless there's a new announcement. But the reason this matters, okay, so Apple is, one of the biggest companies, and it's suspected some numbers like, Grok will tell you that the NASDAQ has had stock buybacks of $800 billion. I've heard it's actually well over $1 trillion. And you can only, track, it's a bit murky as to really how many stock buybacks they've had, how much of it was generated by, like, say, corporate debt, where Apple goes ahead and prints a bunch of corporate debt to fund their stock buybacks. But one thing to watch here is there's a massive gap up in the NASDAQ here. Price tends to want to go back to the gap. It doesn't necessarily do that every time, but there's a fair value gap here. This big green bar is probably a fair value gap. I'm not looking at the indicator right now. This when price moves too fast, too far. Price tends to want to go back and kind of make that right. And that's what it seems to be doing. But there's an actual gap up on the open from Monday, May 12th. So price may want to come back and grab this gap. Now, what it does at that time is going to have a lot to do with, what happens in the news cycle and, if something changes or whatever it is. But as of now, the metrics on the NASDAQ are definitely looking for a pullback, and they were anyway. I don't think it's any coincidence that the metrics on the NASDAQ started to get to where a pullback was imminent, and all of a sudden this announcement comes out today. I don't think it's any coincidence at all. I think this is just what it is. The big M word, manipulations. Now, I don't have any proof, and no one can ever prove it, probably. And it's not like this isn't done all the time. But one thing that the markets like is stability and predictability. That's for sure. One thing markets like is it's predictability. Okay, so think about it this way. If you're an investor and you know that there's like a 90 some odd % chance that in 6 months the stock market's going to go up, then you're just going to put money in the stock market. Pretty simple, right? Like, if you have a really high probability that you're going to make money in the stock market, then you're just going to put money in the stock market. I mean, this is not that hard. Well, guess what? Predictability is a little out the window right now. Okay. So this is why the stock market is not as strong as it could be. Right. But that's fine. The stock market shouldn't just go up indefinitely. That's not realistic. Right. Now, a lot of it has to do with the system and how things are built, and the fact that, people's retirements are in the stock market, and everybody's 401k just keeps getting pumped in the stock market, and people don't care and they're asleep at the wheel. And then, because retirements are in the stock market, they have to keep it going up, and the rest of the world puts their money in the stock market. And I mean, it's a stock market is the ultimate penultimate version of too big to fail. So when you start messing with that, that's really what gets people's attention. Like, when people vote, it's generally to do with markets. People care about their money and their survival. So at this time, the markets are being used, I think, in economic warfare. So what's going to happen next? Well, NASDAQ, I think, will come down to at least grab 20,300, right? What happens next with USD JPY? I mean, if you look at the algos, it's just going to continue down. There's a bit of support. There's a big support right here at 139.85. And then there's a local support that's already being tested, like right now, at 142.38. And this matters to, like, all the markets. Now, the question really is going to be, whether or not this continues down. Having the stock markets go down is going to supercharge what was already happening here because money goes into the Japanese yen and pushes this down. So price is either going to go like this and bounce up a little bit, and then who knows what, and this is on the daily chart, so we're going into next week, or price is going to at some point go below, maybe retest and head down, or anything in between. But this level right here at 142.33, look, the way markets do is they make a big move in one direction and then they tend to make a big move in another. Sometimes there's a little sideways, but rarely do markets always. Okay, I gotta fix my screen. Thank you for the note. I know why. I'm starting to figure out why my screen keeps freezing. All right, so back to the chart here. Again, the level that matters, 142.32, sitting right here. Okay, right here, and price is either going to, it'll do a lot of things, but the three main things that the price will do is either sideways and then up or down, right? Or down. And this is definitely going to reflect what's going on with the NASDAQ, right? And, those are the main ideas. And then you have this 139.84 where price could actually mellow out. So if you're wanting to know what's going to happen with the stock market, with the NASDAQ, which effectively is going to tell us what's going to happen with Bitcoin and everything else, I would say watch this chart, the USD JPY chart. And if and when this approaches 139.80, there is a decent chance that everything will stabilize in the NASDAQ. Now, I wouldn't be surprised to see that coincide with a move to 20,300 or so, where this gap is right here. But we'll see. And we'll see what the algos say when that happens on that day. In the meantime, Bitcoin, it's holding up very nicely. So if you look at the way Bitcoin's behaving, sure, it took a hit. But let me look on the 3-hour chart, and you're going to see that the move back up is pretty strong here. It's a very bullish candle. If it can, this candle's got only, another hour and a half left in it. So this could do a lot of things, right? But as long as that tail, let me zoom in, as long as this, 3-hour, 4-hour candle is going to look the same. But as long as that long tail continues to be there and this price heads up, that can be bullish. It could also be bearish because you had that happen right here and it became what's called a hangman candle. So this candle, that little green one right there, because price didn't go up after that and price went down hard after that, then that became a hangman candle, which is very bearish. So what this candle does, it could be either bullish or bearish. It just depends on what the next candle does, right? As it stands, though, in the algos, let's see. I mean, this really could go either way. This is still bullish high time frame. So it would not surprise me to see Bitcoin not crash really, or not crash that hard, as long as there's not a ton of like really big, market like NASDAQ market madness, right? Now, there's a lot of liquidity below price, which is probably a reason why it hasn't really crashed down too hard yet. So the first place, if price continued to retrace, right? If price was going down and not stopping going down, like if it just kind of does whatever and then heads down, I'd look at about 107 and then 105.8. Look at these levels in here because of just where these pivot points are, right? So if I were to kind of point out these pivot points that matter as to where Bitcoin might go, we're looking at here and really here. And it's already gone there. You can see Bitcoin literally tapped those levels already right there. So the move's been made, right? Now the question is, will it be made again? Will it continue to crush? If the NASDAQ does, and I think it will, Bitcoin might at best go sideways, quite possibly go down. And if there's enough bullishness and Bitcoin ends up being like gold, which gold just continues to kind of push up. It's, it is kind of moving up here. I'm not, whatever this trade is was hypothetical and prior to the news. So I can't, I can't really rely on that anymore. But let's see here. Let's go delete all this prior data. So Gold seems to have kind of tapped a top at 33.67, but the market turmoil might lead to gold being strong. Usually, when the NASDAQ falls really, really hard, gold will take a hit, but it seems like possibly the gold market knows that whatever's going on is what's going on. This business with tariffs and whatnot, is that optics? It might very well be. So we'll see. Gold's going to tell us a fair amount. Now, Bitcoin might also behave a bit like gold, where money just keeps flowing into it, right? It's made an all-time high. It's strong. We already saw the big pullback to 76,000. So, the bulls might continue to push it up, but as long as the market remains unpredictable, right? Until we get some kind of further information on the euro deal, then Bitcoin might continue sideways and then pop up later. We'll see about it. As far as trading today, I would probably hang back. Fridays usually suck anyway, and I don't think a coincidence that we're seeing all this happen on a Friday. Fridays tend to be take back Fridays. Sometimes, or a lot of times, options expire on Fridays. And the thing about options expiration is options is where the big boys play, and price needs to be where the big boys want it to be in order for them not to lose a lot of money. So it might just be the price needed to go to a certain area for maybe the NASDAQ or whatever it is in order to keep certain people from becoming insolvent. And maybe that's why all this happened today. And then like next week, it gets walked back. We talked to the European Economic Commission and whatever you call it. And we made a deal and everything's great. And all of a sudden the stock market just starts rocketing back up. But remember, this all did occur at a time when the NASDAQ was showing signs of weakness, right? So as far as trading, it's a tricky day. I would be, if I were trading today, and I probably won't be, but if I were trading today, I would be extremely careful. I would only be taking the very obvious trades. Like, no way I would trade into what just happened. I would wait for this news to be digested, and it seems to be digesting, but I would just wait for the technical market to unfold, which seems to be unfolding. Let it mature a little bit, and then I might look for some moves right here. Okay. And that's just going to be the case for anything, any of this. I mean, you don't want to trade this stuff. Look at this chart. You don't want to trade that. That's madness. You can't predict what's going on here. But once this unfolds a bit, there might be some opportunities. But remember, Fridays are dead days. All the volatility leaves the market after the open because at least with forex and a lot of short-term trading, no one wants to hold a position over the weekend, especially in the current environment when freaking tweet or whatever you call it on True Social or anywhere else can just throw everything into a tizzy. You got your money on a trade on Friday, and then an announcement is made on Saturday, and then the market's gapping in the opposite direction on Sunday, and you're out of your trade. So people are I can almost guarantee you in this environment, compared to the last several years, people are probably not holding positions over the weekend. In markets that close. Bitcoin's another story, and that's fine. Bitcoin's become, well, it's expensive to trade, and I'm a scalper. So, basically at this point with day trading, I pay massive fees if I want to take small moves in Bitcoin. I can't really do that. I can't justify losing 10% of my profit in fees. That's why I prefer to trade forex at this point. Swing trading is okay, but the problem with swing trading is the same problem as holding a position over the weekend. It's just you hold a position for too long, and Friday morning happens and the market's going to a tizzy and you lose your trades. So the great thing about it is there's a lot of volatility that gets added to the market. So there will be more swing trades. It's not like you can't win swing trading, but at this point I prefer to hit and run. And hit and run is great, but you have to have some predictability in the market in the short term, even for that. NASDAQ is starting to find a little bit of support here, but I mean, if I were to look at the algos on the NASDAQ, it's only on the 30-minute chart. The stock are going to continue down. You're probably going to see the NASDAQ, it'll shape up for a little bit right here. But yeah, we talked about this already. I think you're going to see the NASDAQ make its way down and maybe quite precipitously to here, right? Down to about the 20,300 mark. And if it doesn't do it today, it'll probably do it when it opens up on Sunday. It'll probably gap down unless the news cycle changes. So, so really that's it. I can't, there's nothing that I can trade right now according to my rules. I just don't, I don't have the predictability right now to do anything besides gamble, and I don't gamble. So, in this case, I'm going to hang back. I'll probably hang back all day, but if I do decide to go ahead and trade and it makes sense, I usually don't do it on Friday anyway. Fridays, my results are far worse than Tuesday through Thursday. Mondays suck too, but Fridays Fridays suck, man. Money leaves the market. There's no volatility after like lunchtime, and that's like, what lunchtime's in a few hours. Lunchtime's in like 2-3 hours. And then what? So whatever I do, if I'm going to do anything, is going to be little tiny scalps, and I got other stuff to do. So I just want to tell everybody what's going on. Go ahead, links in the description. We're going to do a couple of things. I'm going to set a date for a workshop where everybody's just going to watch me trade for at least a couple days. So I'll probably set that date for prior to the end of June. If you want to be contacted to get your free ticket to that, go ahead. You can just get the free algo, right? And I will put you on the list as well. So just go there, click the link in the description, and I will send you a workshop, and you'll be able to see how I trade for a couple days. Like, I mean, I won't share all my secrets, but for anybody who's really watching, you'll probably be able to suss out a lot of the secrets. Like, for anybody who really knows what they're doing, they'll be able to see it all. But I'll share my entries and stop losses and all that stuff. I'll share all the trades. And, I can't say I'm going to win them all because no one ever wins them all, right? It's just going to be whatever the market is for that couple of days and however my system plays it out. But you'll be able to see me trade. And of course, during that time, during those, few hours that I'm trading, like say the morning open, whatever it is, I can answer questions. We're going to talk about just like what trading is in general, what it's like to be a trader, how money is made, how money is conserved, how capital is conserved. We'll just talk about anything you all want to talk about. I'll even do like some custom charting as long as it doesn't interrupt with the trading. Because when you trade, especially when you're day trading, there's a fair amount of downtime. You're just waiting for your trade to form up. It's like, oh man, okay, this is going to happen now. It's going to happen in 2 hours. You don't really know. You have to wait for the conditions to occur. But once that happens, of course, you'll see me get into the trade. And in the meantime, we'll talk about whatever it is you want to talk about. It's going to be a free workshop. Now, this is the only one that's going to be free, by the way. I will be charging for these workshops in the future, but this initial one will be free. First one's free. Try this. Also, you get a free algo, and you'll get on our weekly update list where I do market updates every week, and that way you don't miss that. So please do that. Link description, click link, give us your email, give us a name. I don't care if it's a fake name, John, Jacob, Jingleheimer Schmidt. I don't care. We'll send it off to you, and we will see you next week. Again, if it's worthy, if there's news or if it's trade worthy on a Monday morning, I will get on, I will go live, I will trade. But as a forex trader, Tuesday through Thursday are my bread and butter. So I'm still trying to kind of figure out the new format. I got the pre-market, and then I do the private live lab, which is, where I go and I do exclusive work for my Algo Factory members. And then I go back and I will do live trading if there is any trading to be had. And what I do with that is I'm not going to show my trades to everybody on YouTube. Anybody who really knows what they're doing should be able to suss out what I'm doing, and it's all for educational purposes. And you need to do your own research, and all your trades should not be based on anything I say and so on. But over at Algo Factory, the private members, I do share what those trades are because they're learning. So they can use my trade data to learn how to do their own research and formulate their own trades. And they'll be able to see when I get in and what my stop losses are. And I kind of tell them like, hey, I think I got a trade coming up here, and I think this is going to be my stop loss, and I'll let you know if I enter. And, it's like, I kind of walk them through the whole thing at Algo Factory. So if you do the link in the description, you'll have a direct link to all that stuff, and you'll be able to find me pretty easily, or just go over to algofactory.tech. The other great thing about us is Via the Gorilla comes in at least once a week to chat with us. And if there's anything he hears out there while dealing with major players around the world in finance, he will give us whatever he hears, right? Whatever he's allowed to talk about. he'll let us know. And he did say that today was going to happen. He said yesterday, he said last week, I think it was like on Tuesday or Wednesday, that within a week and a half, there would be a monkey hammer, that things would go down. He said that. Okay. Well, here we are today. Bitcoin went all the way back down from its new all-time high down to like 107 and might still go down further. NASDAQ really did pretty well there, held on for the week, tapped out at 21.5. Now it's all the way down to below 21,000 and may continue down, right? So what he said happened. It was a monkey hammer. It's just totally predicted. We were told about it. Shouldn't be a surprise to anybody at Algo Factory. If you want that kind of info, algofactory.tech, come on over. We'll teach you how to trade like a hedge fund pro. We'll give you the information that we think is going to be good, because no one knows the future, but we're pretty darn good at predictions anyway. So come on over. Don't forget.
Join us or die.
Alan Rickman is just kidding. You're not going to die. But do join us. We'd love to have you. We'll see you bright and early, if not before Tuesday. And pay attention, Sunday I will be doing a market update. Thanks for watching.